All right, so everybody wants to catch the bottom. Everybody sat there in a downtrend going, is this it? Is this the low? And they buy it and it keeps going and they buy it again and it keeps on going lower. So, well, today I'm gonna show you why that's the wrong question entirely. Okay? You need one price, and when price crosses it, the selling is finished, and that is officially the bottom. Okay? And that usually happens way before it looks like a bottom to anyone else. It's day 10 out of 15. Let's go. And yesterday, we talked about in a uptrend, the lows control, not the highs. Okay, the controlling swing low is the last low before the breakout, and crosses below that low, the uptrend is terminated. Today is the exact same system, just upside down. We're going to be talking about downtrends there. And the chart you're about to see is yesterday's chart, just flipped over. And at the end there, we'll do a third one, which is going to be sideways. The market isn't going up, isn't going down, and that's what we're going to talk about for today. So, what a downtrend actually is. Well, supply is beating demand, more sellers than buyers consistently there, and because the sellers are in control, the swing highs control the trend. Prices making lower highs, lower lows, the impulsions are down, the corrections are up. It's just the opposite of yesterday. And the last one here, okay? In a downtrend, you're only looking to sell. Longs are somebody else's problem. You don't want to be trying to catch it, trying to catch that reversal. No, just go with the trend, okay? Sellers are controlling the highs there, so you also want to watch out for the highs being held and not broken through. And the last topic is actually worth sitting on because it's the exact opposite of what everyone does. Okay, everybody stares at the low in a downtrend. Everybody is trying to call the bottom there, but think about what a new low actually tells you. It tells you that the trend did something, it did its thing, okay? It continued on lower. The highs are what telling you whether the selling is still on or off right now. Okay, and more than that, a little more than that, they tell you the exact moment that it stops, while everyone is still guessing where the new low is. The highs are telling you the story there. That's before any indicator, before everywhere else, before anything, okay? We're just watching the highs there. It's not a secret indicator, no. We're just playing the right side of the chart. So which high am I talking about? I'm talking about the controlling swing high. That's the official version there. It is the highest swing high sitting between the breakout and the swing low that got crossed, which again means nothing the first time you hear it. So here it is properly, okay? You want to find where price broke down below the old low and then look back at the last high, and that's your level. That's it, okay? Notice how it is also the lower high, not the original high all the way back there on top. No, it is the lower high, okay? It's a mistake. That is a mistake that people keep going the other way, you know? They like to look at the big and obvious low there, but you actually want to look at the highs. That's what controlling your trend. Now, here's how a downtrend gets born. Three segments in this order. One is a segment down, starting from a swing high. Two is a up segment that does not cross above that swing high. And three is another down segment there that crosses below the previous swing low. So first we have a lower high and then we have a lower low right there. That's when it's official. You must have that lower low, and then you want to start looking to sell. It's not when, oh, it feels heavier, price it's red here. No. As long as these three things happen, you are good to go. In that third segment, the one that broke under the low has a name. The name is the breakdown segment, as you can see, and it is the down segment connected to your controlling swing high and the one that pushed below the old low. Same reason as yesterday, that's the segment that proved the sellers were still there Everything else is just price wobbling. That's the one evidence you want to look for, okay? And you want to remember this box because tomorrow it starts doing work. The only supply zones worth trading in a downtrend are inside of the breakdown segment. So, the downtrend is running. What happens next? The level moves and it moves down. Every time price crosses the most recent low again, the most recent swing high becomes your new controlling high. So it drops, each push drags the level down behind it. And it only ever goes down, never goes up, which is the same gift as yesterday because the longer the downtrend runs, the tighter your invalidation gets. You're not risking more as it goes, you're risking less. And this is the part the video is named after. Price crosses above the swing high, the downtrend is terminated. It's not bottoming, it's not looking a bit better, showing a little strength. No, the downtrend is terminated, it is done. And after it's done, it turns into a range. So it's not the dominant direction anymore. It stops being a nods enhancers for your shorts, and your sells don't have a trend behind them anymore. This is the whole point. Yeah, I want you guys to look at where this level is. It's nowhere near the bottom. It's up there. So by the time price crosses it, you know the selling is finished. While everyone is still down there arguing about whether the low was the low, you never called the bottom. No. You never predicted anything. You just watched one price point. How do you find it on a live chart? 5 steps, and it's yesterday's 5, but instead of up, it's down. Okay, so one, you want to start at current price from right to left always. Look up left for the most recent swing high and place a vertical line on it. 3, you want to keep going to the next higher or equal swing high, and then you want to place the second vertical line there. 4, you want to place a horizontal line on the lowest price between those two lines. 5, you want to check two things. Has price crushed below that swing low, and has it stayed above the lower swing high? If both are true, you have a downtrend, and that lower high is your controlling swing high. If they're not both true, you want to repeat 2 to 5 further until they are. In the shortcut boxes, again, I showed you guys yesterday, red box on every down segment, green box on the up segments. Draw the last 3 and it's a staircase going the other way. Impossible to misread, okay? Once it's on the screen, impossible to misread. And it's the same route, the boxes have to be connected at one corner. And if that's still your mistake, if you're still making errors there, if the two boxes don't touch, you marked something wrong. Okay, go back and fix it before you do anything else. And these are the 3 steps, okay, once it's in your hands. You start at current price, you want to draw the 3 most recent segments, and you want to confirm whether it's valid or not. If we have lower highs and lower lows and price is still below the controlling swing high, that is great, we are in a downtrend. And that should only take you 10 seconds. Then you move and go look for zones inside of that downtrend. Now let's talk about sideways trends because supply and demand are basically balanced in this area. Nobody is winning. Price is usually consolidating inside of a range and it expands and contrasts. So instead of going anywhere, the range is going to expand and it's going to contrast. Roughly equal highs and equal lows. And here's what you do with it, okay? You want to sell near the highs and buy near the lows, which is the only time ever tell you to trade both sides. It's when we have a sideways trend. In a downtrend, you want to sell. In an uptrend, you want to buy. But in the sideways trends, that's the only place you're allowed to do both. And we do have some rules for sideways trends, okay? Sideways is not the leftover, no. It's 3 segments, same up, same down. It can start with either an up segment or a down segment, doesn't really matter which. The difference is that the ranges are contained within one another. They don't step up like an uptrend, they don't step down like a downtrend, they just stay inside each other. So when I said on day 8 that I don't know isn't an answer, but sideways is, this is what I meant, okay? You can mark it and it's got a definition. It's not a real thing you're identifying, not a shrug. No, it is a real thing there, sideways trends. All right, three things for you guys to remember in a downtrend. The highs control, not the lows. The controlling swing high is the last high before the breakdown below the old low, and the lower high, not the original one, okay? And it goes down on every new low. Price crossing above it, that's when the trend ends. Up, down, sideways. That's every chart that exists, and you can now name all three with rules as well instead of feelings. And that's day 10. Tomorrow is a big one. You can find zones, you can score zones, and now you can read trend properly. Tomorrow that we're gonna finally put everything together, which zones you're actually allowed to trade, which ones you leave alone, no matter how good they look. We have 5 more of these, and I'll see you tomorrow.